Hello everyone, welcome to today's market recap on the daily plan that I provided and as well as the live market commentary on StockTwits. So if you don't follow me there, I'll leave a link in the description. Here's my profile, and without further ado, let's get into what I was looking at this morning. Whoops. Alright, well first I'd like to say thank you to everyone subscribed here on the YouTube. Pretty quickly hit 100 subscribers. Thank you everyone. If you like the content, please subscribe. So, first thing I posted on StockTwits, I said, good morning traders, let's get this week started, shall we? Creating a daily plan, step 1, checking out the TPO. Where are we trading? What can you take from the overnight distribution? All things that will be covered in this market recap. So here we are, the picture that I posted. Where are we trading? We're trading below the balance area, which I spoke about in the past week or two. This is Friday's trading day. Yep. Yeah. So this was what we're looking at this morning before market open. Very ugly distribution. We don't see too many places. We see a few pockets where price is liking to trade, but not something like here where we have a nice bell-shaped distribution. So we have that to note. Looking at the highs and lows, we could see a poor high and a little bit of excess on the lows. So likely to finish the auction to the upside, which of course, as we now know, that is what happened. So things that we could take from here. We are overlapping some balance, so maybe if we continue down here for the coming days, we must keep an eye if we're going to build balance down here. So that was step 1, just looking at the TPO. Step 2, or creating a plan. Step 2, zooming out to the daily, where are buyers positioned, where are sellers. What can we take from the distribution of volume? All will be covered in video recap later. Alright, so looking at the daily, we had Friday's close all the way up here above all of the volume. So what are we going to look coming into the Sunday session? Well, we're going to look for all this trapped volume to then support a bid. Being that it's a Sunday, though, and being that it's a Sunday, there won't be so much volume to really hold a bid, or at least see the distribution that we like. That's why I stay away from Sundays, but coming into the day, we could already see the forming of a B-shaped profile. So someone is down here buying this up, happy to buy this here to sell at a premium. And the same thing when we visited the highs, you could see lower volume nodes, and then we have a huge seller here. So things that we should be conscious of on the tape. Now, of course, in the TPO, there's structure above that we were looking at, but that's something that we'll cover in the room. So creating daily plan, step 3, bear candlestick chart, knowing what we know about the distribution of volume. Where can we infer traders' stop losses are? Remember, we want to trade with market makers. Where are they loading the boat? Where retail is getting stopped out. Okay. Alright, that picture looks good. So where can we infer stops are? Well, when you go long or when you go short, I hope you put stop losses, but where do you put a stop? Say you're taking a double top short over here, around in one of these candles. Where are you going to put your stop? Above the highs, no? Maybe you enter on this candle here, and you put the stop right above that high. So above highs and lows, we're going to see stop losses. And then when we match that with TPO structure and footprint distribution, where the buyers and sellers are, that's how we come up with some daily plans. Let me X that out. Alright, so this was the daily plan. Still a lot of structure that I wanted to sell to the top side. As of this point, it is 1:35 market time, so this ended up being the high of day, just about a point below. Got front ran a little bit, but I walked through the live tape on StockTwits, and it was very clear on the footprint that the sell zone could and was being front ran. And a cautious buy zone down here, but of course we went up out of the open. I did say a run of overnight lows could provide a good long opportunity. Why? Well, not only there's going to be liquidity below the lows, but this is a decent area, but I didn't have this as a buy area since we're trading around here. I would rather stay safer and take some extremes off of here. Just less risk, I feel, even though there was a valid level, I believe. If you actually go back to Friday's daily plan, this ended up being a buy zone, which of course was Friday's low of day, which we got. So this was an order flow level, but I did not leave it here just because I wanted less risk. All right, maybe what I was attempting to point out in part 2 of the daily plan is a bit more clear now. So I won't, actually I will pull up the screenshot, I have it right here. So I was talking about that B-shaped profile. We saw someone was active buying, whoops, let me get my pen. We have continued exhaustion at the lows. You could see 500, 600 contracts down when we have 24,000 and about 20,000 above, much more clear B-shaped at this point. So all looking good. That someone, some algo, institution, whatever you want to call it, is accumulating down here. All right. So what happens when we pull above the B? Well, we could see inside the B. What do we see? We see a buying balance right here, and we see a selling balance right there. So when we get above where these sellers are positioned right here, of course, we could see with the selling balance. When we start trading above this, their stops are going to start to get hit, and they're going to provide fuel for the up move. Now, the same thing is going to happen in reverse. If we pull below this B and this buying imbalance over here, all these guys who are trying to support here are going to get blown out of the water, and we'll continue and go for another leg down. So very important keys that you can take away from the volume distribution. And when we use our other tools, that's where we build context and know that this isn't somewhere where we're trying to short the breakdown necessarily. We're trying to long here, or at least get confirmation that we'll visit one of our sell zones. Sellers trying again here on this 4 hour, so I believe at this point we may have popped these shorts, maybe not. I don't think so at this point. Okay, here's the screenshot. So 4 hour chart. The previous candle closed below a majority of the volume, but as you could see, this was during the overnight session, so the volume is much lighter, but we do have a nice bid here. Now, as we're coming up, sellers, you could see they're building out this volume node. They're starting to try and sell this. We see some temporary exhaustion, but we know this probably isn't complete exhaustion just because of how big these volume nodes are. We're going to want to see these sellers position themselves way more. So footprint gives you the security to know that it's not time for a potential short, and kind of just to wait on the sidelines. Even though you have some temporary exhaustion, you can take a smaller scalp, but the bigger move, the one that you want to be involved in, is going to be up higher. All right, see that? Our larger time frame helped us read this before it happened. So that's exactly what I was talking about. If you're looking at this, oh, let me pull up, got it. If we're going to be looking at this zoomed in on a smaller time frame, such as a 30-minute, what do we see? We see sellers up top. You could already see a P-shape. I'm sorry, I cut that out. Exhaustion, continued exhaustion, what looked like a P-shape, but that's why we have to have our bigger time frames. Because you could be selling this again, you can be taking this is valid plays, but the larger time frames are telling us that we're not going up yet. You see tons of people trying to sell here over them. Thin volume nodes, that's us stopping them out, and they are the fuel for our sell zone. All right, we should know what these circles are indicating at this point. If not, I'll go over it in the recap. So I've spoken about already in this recap, as well as many others. Thin volume nodes, when we're above previous buying or previous selling and below previous buying, is stops. These are people who are selling down here. They get popped and they're all tripping over themselves. They're all underwater trying to cover. And that's what creates this thin volume, this very explosive move up. And then you see we consolidate a little bit, people being stopped out and then thinking we're going to continue down. So maybe they're re-entering their positions. We close this candle above all the volume. This candle opens and it's just off to the races. Same thing here. We have somewhat of a P distribution, some exhaustion at the highs. We pull back a little bit, but sellers, as you could see by the numbers, 3,000, 2,000. We only have 400 or 500 here, almost 600. they're not adding the size down on the tape to move an offer down, and sure enough, they are just fuel again for a next leg up. Hope that all makes sense. Whoops. All right, see how sellers are trying again here. Need to watch these nodes build out. See that on the top two could be a sign. We'll go over and recap. So what are we looking at on the 4 hour? We do see some exhaustion at the highs. Look at that. Almost 11,000 contracts sold under 600. So good exhaustion. These nodes are building out. We have thin volume underneath, but look, we still have a lot of volume over here. So the signs are coming. The market makers cards are being shown, but we want to wait. This is not enough to go short off of. We need to see these nodes build out, and we want to see P-shaped distribution. Also gives us the confidence to wait for our sell zones, which isn't pictured here. It was in the daily plan, but it was 3,900, 3,905 was the first place. I was looking to be a active market participant, on the sell side at least. Let me see. Okay, so I just answered that question. Yep, answer this. All right. Alrighty, want to see where the B period's going to print. Alright, that stuff will be for the room. Do you have a Sierra video? Okay, answer that. Right? Yeah. Buying trying to hold a bit, buyers trying to hold a bit here. If they cannot, we fall to. We'll cover in video recap later. So, back to a 30-minute chart. This closed towards the highs, and you could see we have an active bid here. No surprise that buyers are trying to hold this now. We get below here, we have this thin volume. We'll retrace at least until this large volume area. Then buyers are going to have to add where there's a previous bid. If not, we're going to completely retrace this candle. Now, as we know, they did support their previous bid, and we continued upwards. But another situation that the footprint gives you the confidence to wait. It's telling you the signs are not here yet. I believe it's much better than normal technical analysis on a normal candlestick chart. I believe that's much more difficult to find. And this was looking at a 30-minute, and now this is brought up on a 5-minute. And now pay attention here. I said, see how zooming into a smaller time frame, we could see exactly where buyers and sellers are located. Look at the buying imbalance trying to defend their position. So we could clearly see that. And we know that we have thin tape underneath here. So buyers are supporting it. That's good. But what do we know now? This is going to be buyers' line in the sand. The longer we spend time accumulating up here, bouncing, the more volume. The second we pull under the bull's line in the sand, if they can't add to this bid, all these people who are buying up here are going to get stopped out. And the longer it's going to take, the longer it consolidates up here, that's the more fuel for the downside. And if we accumulate, or I guess distribute enough up here that it makes this volume look insignificant, we'll just continue right through it until we find a large volume area that's going to be somewhat like this. Of course, we'll chop on the way. We won't go straight because we're going to fill the volume on the downside, but order flow levels. Very important, and you'll see in a bit how big this level actually was. See how buyers are trying to move the bid up on daily. Keep an eye on what is sitting below. We'll cover in recap later. So let me pull up this photo. What do we see here? This is obviously the daily candle, and we have thin volume. So once we came into here, I said buyers are trying to move a bit up. We have a buying imbalance. And this is kind of their line in the sand, but on the daily. Below this, we're visiting this high volume area. So we'll ping pong in between this buying imbalance until this and this selling imbalance. And we're going to be monitoring, we're going to be looking at who's adding to their position, watching these nodes build out, looking for that P shape for our move down. Now, if this bid holds, as it did, as we come back in here, if the sellers cannot add enough, well, we're going to continue up. And that is what happened. You could see how much buyers added here, almost 52,000 contracts, and you look at the selling imbalance we have up top, it's a big difference. All right, so more clues that you could take from the footprint. To my new followers, I posted this. To new subscribers too, if this is the first video you're watching, you're probably confused. I would go and start with this one. I have it pinned under my channel, I believe. Alright, do you know why we just had an explosive up move? This screenshot should tell you why. We'll cover some of the reasons later, so let's take a look. Where is it? I don't have this one up already, sorry. Alright. So, why are we having an explosive up move? Remember those sellers that were here? Well, we pulled above them. Their stops are all getting ran. This candle closed towards the highs. We know buyers' line in the sand is here. We defended it. Sellers tried adding with this high volume from the previous candle in this area. You can see double selling imbalance, thin tape, all of them got ran out, and that's what provided this explosive up move. So you're seeing the same thing, this is just different time frames. And then that is some of the reasons, and then there's other reasons that we could take from the TPO. But again, the more advanced topics, well, not only from TPO, but for footprint too, from the footprint, that'll be in the room discussed and taught. Sellers trying again here, still have work to do. Also look at the tape on the top node, should tell you something about the market auction. Alright, what are we seeing in that photo? Oh, well, that's the wrong one, so this one, I believe. Alright, so back to a 4-hour candle. What do we see in this auction? Well, we don't see a B shape, we don't see a B or P shape. We do see these nodes building out. Sellers are trying, but look at the volume up top compared to below. There's still market participants who are willing to transact up here at the highs. What does that tell us about the market auction? It's not exhausted yet, so we're likely to continue up until at least we exhaust or temporarily exhaust. And sure enough, that's what happened. All these guys trying to sell here were too early, and they got stopped. For those looking for shorts, look where all the volume is. Wait until market makers show their hand on the tape. You need the volume behind you for the trade to work. Whew. So look at all the volume that is below us. We're trading up here. We need to see at least some sort of P shape, some type of temporary exhaustion with a huge selling imbalance for the short. We don't see that yet. Oh, whoops. All right, 1 second. I'm just going to take a sip of water. I apologize. All right. Continuing on. You seeing this distribution on the 30, remember how the market will react when we trade above or below this. So already spoke about this, but I'll go over it quickly again. Look at the distribution. We see buyers here, sellers here. What happens when we pull below? We're going to run the stops, fill out this volume gap, which can be seen by that low volume node, and then we'll come back into this high volume area. And now this is going to be the new battle range. Buyers have to add here for us to revisit this high volume. If they can't and sellers move down on the tape, well, we'll continue down lower. Alright, sellers are doing exactly what they need to do here. Still a little more work for the follow through, but good so far nonetheless. So we could see that they built out these volume nodes much more now. Still not as prominent as we would like, but again, they're doing their job. We are seeing some exhaustion. Everything's looking good so far. But still patience. This isn't signs to be in a short yet. Should be no surprise why bulls are trying it here. All market structure. So back to the 5 minute, and bulls are trying to support their line in the sand. Look how selling nodes are developing now. So now we could clearly see that this distribution is becoming prettier. So our eyes are strictly on the tape. We're looking for our clues for a possible entry. I will briefly, very briefly discuss how I entered. I received an email, someone asking. What I actually look for entries and all of that stuff will be in the room. I'll go into detail on the criteria I look for, but nonetheless, I did speak about it earlier this morning. I believe it was in the daily plan. I read it before. Where do we want to enter? We want to enter on retail stops. So I'll show you exactly on the footprint what I saw that was a stop run that I wanted to enter with here in a few minutes. Alright, daily nodes building out nicely too, exactly what you want to see. So still have some more work according to the daily looking at these volume nodes, but sellers doing their job. Now we're just waiting for our entry criteria. Buyers defending their line in the sand. You could see as we're coming down to this volume node, they're trying to put a bid up here. But when you're trying to add a bid so high or add a offer low, you have to be careful because you pull down below, especially with how big the sizes get towards the extremes. That's what gives us the volatile mean reversion trades that we love to take. But yeah, look at this exhaustion. We have 42,000 contracts, almost 43, sold under less than 2,000. So we are seeing exhaustion for sure. Remember what happens around this distribution. Keep an eye on the tape. You could see this distribution is getting prettier and prettier as time goes on. Someone is selling as much as buyers want to buy up here. And remember what I was talking about earlier about this order flow level that we saw, the buyer's line in the sand on the small 5-minute time frame. So I'll show you here where I entered. Through the distribution on the daily and 4-hour, I was able to see that market makers or whatever large market participant was on my side. Someone was adding large selling here. So what am I looking for? Well, I'm looking for this stop run into my sell zone, which the sell zone was right here, 39.05 to 39.10. But obviously we were seeing that it was being front ran. Now there's some other tools that I use, which is this line right here. So once we got the exhaustion on the run up into the sell zone, we came down. I saw that someone was trying to sell this. So we have a stop run of these sellers here. That is a valid entry. That I did not take. I was a little skeptical because we were still, pretty much blowing shorts out of the water time after time. But now we finally came back to the cloud. Sellers now we could see are trying to move down. So what does this set up for us? This is going to be fuel for market makers. Market makers are going to want to run these people stops. That's exactly what happens here. You could see someone was trying to sell at this volume node. You could see it's bigger than the one below or the one above. And then what happens when we pull above this? These thin volume nodes, that is a selling imbalance. And then what are these two huge volume nodes compared to the ones below, and especially the ones up top? Look at that exhaustion. That is people being stopped out, these sellers, and these are market participants who are seeing what we can see and are shorting up here. So a little mix of the two, provide the short. Now, I wasn't quick enough for this. I got it as we were pulling down. I usually have a limit order with the price that I want to get filled at, and as soon as I see what I want to see, I'll click to enter the trade. So I got filled at 3,900 on the way down. But yeah, that is how I entered. We'll touch about entering, so yep, just discussed that. And so as I've also discussed about targets, I always pay myself at 10 points in the money. 9 out of 10 times would be like that. If I'm playing a lesser quality setup, I might pay myself at 5 points, but I try not even to take those types of setups. I try to take my better setups, but I'm not perfect. And to touch on that, actually, we'll talk about my exit. So I paid myself at 10 points. I took pretty much all of it off at 19 points, and then I left a single contract for trailing stop or like my ultimate target. But we'll get to that in a bit. So this was the line that I was talking about before, and as soon as we broke below, as you could see over here, buyer zero print, with a bid, they're defending this. And then we had someone trying to buy it again, and we closed that candle below all of them. Game time. They lost this level. We're going to come back into it, probably see a selling balance here and continue lower, which I believe is exactly what happened. Alright, using the tape we could see exactly where market participants are located. Can you see bulls and bears line in the sand? So this is a 5-minute, and let me double check 1 second. Right, hold on. Okay. So, we see someone is supporting a bid right here. And we could see sellers are right here. Selling balance is up here. They're trying to move down on the tape. This is where I should have actually exited my trade. You could see we have a bid here from before. We pulled down below. This is a stop loss. So we ran stops, buyer stops here, and we ended up running some buyer stops and peak below again before actually going up. So I want to not only enter on a stop loss, but I want to exit at a stop loss because those are the extremes. Now the tape was clean here, but I got a little bit greedy, honestly. And rather than taking it off 3 points above or in front of my final target, I took my trailing stop, which was 10 points in the money. Not the end of the day. There was only one contract left. But I let my trade thesis work out, even though the footprint is never wrong. Order flow always wins. But even that's another thing that I like with footprint. When we do things incorrectly in our trading, the footprint, we see the transacted volume in front of us. So we could literally see what we did wrong and why, because the market's not gonna lie. We're the ones who are wrong, and we have the data in front of us telling us why. So it's very useful to better yourself in your trading and your trading styles. So I did not exit there. I held, and this was now the 4-hour. We could see that these nodes are building out. Buyers are holding this here. All right. That was another reason. That was actually the reason why to go out on the stop loss, because we could see how much buyers were adding. If we just saw a normal stop loss on a smaller time frame, it doesn't really mean anything. But we have to think about the context on the large time frames is why. So what are we looking at here? We could see the stop loss I was just talking about. We peaked above, ran buyers stops, came back below, buyers added heavy here, and then that's when we're off to the races. And my trailing stop was up here at 38.90, so obviously from 3,900 was 10 points in the money. Again, that was another fine place to exit, but I just let my trailing do its thing. I believe that was everything. Yes. Oh, one more thing. So, I said, see what happened when sellers could not add, meaning over here. When the buyers did add, sellers then had to add here, and they didn't. Someone said, I may be wrong, but from what I understand, due to the above reason, this candle here closing above most of the volume, the next candle is P-shape, is indicating short covering. Yes. So a lot of people say P-shaped distribution is short covering, which they are right. You always want to look at the context. I say a lot of the time that it's a seller adding heavy up there, similar depending on context. So why is this short covering? Because look at all these shorts here. We get thin tape, that's them marketing out, and then this is where the majority of them are stopping out, creating this P-shaped profile. So yes, this is these shorts covering. Yeah, I hope I covered that. And that was everything. That was the only trade I took today, and the live market commentary I provided. So, as I'm sure most of you guys know, I am opening a room October 1st. If you're interested in joining, shoot me an email. I'll leave my email in the description, and just say how you want to reserve a spot, because I'm going to have an opening group that I'm going to have with, and then we'll slowly add after that. But hope you guys enjoyed today's recap, and I'll see you guys tomorrow.